Let's start on that far side, and we'll run down to where I'm sitting over here. We're talking about hyper-personalization. Before we even get into this conversation, people are saying, what is hyper-personalization? Let's start there.
No, thanks a lot, Brad. I think when we look at hyper-personalization, I think the most simplistic form or definition that you can look at is taking a big, large data set, applying some ML or machine learning and some behavioral science to ensure that when I communicate and engage with my customer, that the conversation becomes very, very personalized. Where if we look at where we stand today, I just received my bonus payment, but 5 minutes later I receive a message telling me that I qualify for a 5 million rand loan, where I'm trying to pay that off, so it's really just knowing the customer and ensuring that when you talk to him that it becomes a lot more personal. I don't frustrate my customer by talking to him at the wrong time and talking to him about the wrong thing. So that would be a very simplistic definition.
Yeah, Jonathan, I'm going to bring you into the conversation here. What do you think are the key benefits of that concept for both the banks and the consumer?
Thanks. So I think thinking about the key benefits for the bank, it comes down to obviously the personalization of the service, which makes customers feel more valued and understood. And I think, interestingly, I was thinking about this a couple of days ago. The concept of hyper-personalization in the context of this evolving environment of the banking landscape, moving more and more towards digitalization, it's somewhat ironic in a way because you're increasingly moving customers towards digital banking and therefore having less personal contact with the bank. But in doing that, you've also got this move, and a couple of the speakers this morning have spoken about this increasing need of the customer base to feel like they've got the banks and everything else at the tip of their fingertips. And so that need for customization and personalization, despite them not having this personal contact with their banks, is now increasingly more important. From the bank's perspective, the benefits, at least from a research perspective, which is my background, personalized service, customized service increases retention rates. It increases the chances of bringing new customers on board, and it increases the chance that customers are going to cross-sell. They're going to take up more products because they know that those products are going to be relevant to them. And I think a perfect example is if you have a look at something like Netflix, customers are willing to provide more data, like has been spoken about this morning, because they know that the more data they're going to provide a platform like Netflix or many other platforms, the more relevant the service is going to be that they're going to get. In the case of Netflix, they're going to get more relevant recommendations of what movies or series they might be interested in. And so banks, from a hyper-personalization perspective, are moving now towards the realization that they need to ensure that the services that they're offering, the products that they're offering, the communications that they're sending out are as relevant to the individual as possible, because otherwise the customers are going to go elsewhere where they're getting that personalized service and that customized product offering.
Yeah, Matthew, you're with Fico and you're all about the data. That data that you're collecting, how is that being put to use to create this hyper-personalization?
Thanks. You can hear me. Thanks for having me. So, there's many facets, and just going back to add on to hyper-personalization. So, typically, personalization has been mentioned, has been around for decades, but hyper-personalization is really personalizing across the customer life cycle. So, it will be your originations, your collections, your customer management, your fraud. How do you get that consistent kind of message? And really about using the data is using contextual data, so using transaction data. So I want to be personalized in a way that's relevant to me now. So being able to actually process from real time and batch transactions on an individual can then give me some more insights that typically I wouldn't know. So as was mentioned, if a big deposit goes into my bank, it would be great now if the bank serves me with some investment products or some savings products. If I'm paying school fees, then surely I have kids, then send me some offers to maybe put my kids through like some savings portfolio. So it's really using that data in a combination of batch, real-time data. There's all this streaming. It's analyzing that data in a sense that you make use of it, but then you need to action on that data. Once you've got that data, action on it, and then evaluate what's happened.
Yeah. I'd love to talk, Sherwin, about that actioning that data. I mean, that's what you're doing. You're saying, how do we use this data? How do we action it to thrill the customer? So what are you doing practically?
Yeah, so practically at MTN, we've actually enabled quite a lot of enterprises to utilize this data set to ensure that the communication downstream or the execution layer is taken care of. Because we, for example, we provide the omni-channel communication leg, where if you look at the omni-channel flow, a lot of the speakers were speaking about the service leg, where you tie and knit together the process or the customer journey, where he starts an application on a device and it might end up in a branch, where we focus a lot on the communication leg, where we ensure that once you go through the understand phase, where you ensure that I know which data set I'm utilizing, I've enriched my data set because I'm meeting another enterprise in a clean room somewhere, and that my data set is now taken care of. I've looked at the use case that I want to execute on. We then enable the leg to ensure that we can deliver a constant message to your end customer across multiple different methods of communication. So this tailors in, because we look at the Africa market, or a lot of focus on our side is in the Africa market. We look at knitting together the traditional methods, so like standard SMS, NI-USSD, and all the traditional old products, and then merging that with a lot of the new capabilities that the digital space provides, like in-app notifications, sending comms and messages inside of websites tailored to the customer. So when you are served a message from the enterprise, firstly, it's personalized. It's within a channel of your choice, and preferably at a preferable time that you want to receive that. I think looking at what Matthew said, if he's a parent of a child, or if you're a school teacher, don't send me a message at 12 p.m. Send me a message when I'm at home at a particular time, and also in the channel of my choice, where I am engaged and not ignoring that specific channel. And we try and knit it together to ensure that if the message does not land on a particular channel, you fail over to another channel where you actually get that engagement.
Quickly, while we're with you, what are some of those channels? Just run through those channels.
So we actually, within the basket, we can chat to you across all the social media channels that has chat capabilities. So obviously WhatsApp is a very, very renowned one. SMS, USSD, in-app notifications, bulk email. Yeah, so all of those multiple channels.
Do you want to add to that?
Yeah, so I think it's also important to a couple of the guys, specifically Lance and Anthony earlier today, mentioned the fact that banks are sitting with the value of more data than most businesses globally. But the challenge that they face is how to actually maximize the use of that data. And that feeds directly into this whole discussion around hyper-personalization, because in order to ensure hyper-personalization, you need to make the most of the data that you have access to. And so Sherwin's pointed to some of these channels that banks are getting access to data through, text and email, but you also have data that's being collected by the banks themselves that are fragmented to a large extent. You've got different divisions, different units, different departments that are getting this really valuable data. You've got a CX measurement team collecting data on how the customer is experiencing the banking services. You've got digital banking teams collecting data from social listening, social media monitoring. What are people saying online about my bank? You've got research and insights teams running surveys. You've got call center teams that are taking phone calls, complaining or asking questions or maybe giving some positive feedback. But is there any integration and aggregation of those different data channels Because imagine the value that the bank could gain and the maximizing of the potential of hyper-personalization if banks were actually able to aggregate the data that they're collecting through all of those different sources so that they truly understand the customer and can say to the parent, here's a product that's directly relevant to you, or say to somebody that travels regularly, we would like to offer you a discount on our travel insurance product or something like that. So I think the stage at which banks are in terms of achieving hyper-personalization is very early. There's still tremendous work that still needs to be done before they can actually say that we are able to provide our customers with personalized products, services, communication, etc.
Well, I'll keep you on the mic there for a moment, Jonathan. Any other digital innovations that spring to mind that would serve the customer to have an even better banking experience?
Well, I think from our perspective, in the research and business intelligence space, I would say what's feeding directly into digitalization of the banking industry is obviously AI, machine learning, etc., and that's helping banks to better utilize data. From our perspective, something that we're increasingly using a lot is social listening. So we're able to collect big data sets on what customers are saying, feeling, thinking online about different banks, about different topics, in order to guide decision making, which is essentially as a research and intelligence agency, that's our goal, is to make sure that our clients are getting access to the best possible data and the best possible insights in order to make good decisions, ultimately in order to make sure that the service they're providing to their clients is as good as possible. And so throughout that life cycle, being able to understand what are customers needing, that therefore informs what do banks need to develop in terms of new products and services, and then going back to the drawing board with research again, how are customers now responding to this new product or service? And so increasingly there's more and more advanced AI and digital capabilities from a research and analytics perspective that allow banks and obviously people across other industries as well to make better use of data in order to make better decisions, in order to better the experience of the customer. So I think AI and advanced data analytics would probably be the two big ones.
Yeah.
And yeah, just to add on to that, so like Absa's awesome chat wallet, so there's now a drive for the banks to create these vector databases, and the vector databases also being the enablement to bring in ChatGPT into the bank. So there's a big drive now to have like a Jarvis super-powered chatbot. So it's really, one of the big things and expectation from a customer, self-service. I want to chat to someone now. If you're able to kind of bring that demand down by having a really powerful internal F&B or Absa or whatever it may be, chat GPT, large language model, then that really helps with that digitalization. It helps with that experience. And I think that's again, just one of the powers of Gen AI. It's generally content and summarization, but there's always going to be a kind of a drive into, yes, it's summarize it, but then the next step will be do something with it. So there's a concept of like a large action model, which is the next step. And again, we're just dipping our toes in here, and we are very far away from hyper-personalization maturity, but we are getting there, moving away from product to more customer kind of focus.
I want to stay with you for a moment, Matt, talking about social listening and gathering of that data. How is that actually taking place for us, assuming we're just going ahead and using social media and other platforms quite openly because it's there for us to use? How are you gathering that data? How is it drawing that data in?
So you can use social media analytics. There is tools and solutions out there that do, they do sentiment analysis. They bring all that data down. There's flags. I think, one of the biggest ways for someone to make a complaint is to do it online. So there's obviously, you have lots of teams in the banks listening to see if they're slamming the brand or they got a complaint, but it is unstructured data fundamentally, right? So it's an input into a larger personalization. You could get to the point on, do we know this customer? Are they negative sentiment? Let's put a score against them and use that into what we personalize.
Yeah.
Do we give them a retention offer? You know, are they a big influencer? And that's another thing. If this person's a big influencer and they're not very happy with our brand, we need to pay attention, because then that can sweep around. We've seen many instances recently. I think one was Old Mutual. Someone complained and then everyone wanted to cancel Old Mutual, you know, pension funds. It's just really, it's a benefit, but at the same time, it's a big challenge, because people are brutal online. They really are. They don't hold back.
Sherwin, if we can come back to you. You're sitting with all of this data, and we also touched a little bit earlier on with Anthony on AI applications. How do we know this data is being used ethically? How does one control that, and who's in charge?
Yeah, no, that's a very interesting question. I think we've also just started making a play within the data space, where we've seen that as a telco, we actually have access to quite a lot of data, you know, and we've realized that utilizing or sharing this data in the correct manner with other enterprises, we can really ensure that the data set that comes at the end of the funnel is quite enriched, so that better decision making can take place. And obviously, we are fundamentally governed by all the various regulations that speaks to the data. There's multiple levels of security that needs to take place. We need to ensure that there's complete transparency, and that's where the concept of meeting you in a clean room becomes very, very powerful, because this is where this data is completely hashed. We remove the personalization, and you literally just become a standard token in the cloud that we can utilize. So there's a lot of regulation and guardrails. I think one of the presenters spoke about it, that governs how we actually control the data, and governs how we share the data, and how we obviously utilize it. Yeah. So, yeah, many guardrails to control that.
You want to add to that, Jonathan?
Yeah, I think something else that's important within the discussion around ethics and the regulation of how do you manage data is also transparency with the customer. How are you making sure that customers know what you're doing with their data? And I think within the banking sector, that's particularly important when it comes to things like credit checks and loan applications, because a lot of feedback that we get when we're doing surveys on, you know, home loans, for example, one of the biggest gripes that customers have is, I don't know why my loan application got declined, or I don't know why my credit score isn't high enough. And I think the responsibility that banks have outside of making sure that data is being protected is making sure that they're being transparent about how the data is being used and managed and analyzed, etc.
And just to add on that, so I mean, banks are using capabilities to obviously decide whether we give you credit or, you know, home loan, etc. What they can use is, once that decision made, you know, with the auditability and the transparency of models nowadays, that you can get that information, is to present the reason codes. This person got declined because of X, Y, Z. And it's quite important, because if anyone wants to say, why did I get declined, it's now kind of almost regulation that they have to show it, especially if, you know, you get audited and there's obviously bias and all that kind of thing. So there is means and ways, and the banks and technology are doing that. I think it's just a way to unpack it in a way that's easy accessible.
I'm going to come back to, did you want to add to that, Sherwin?
Yeah, I just wanted to add another important point, just of observation, being just starting to work in the data space. We've also realized that it's very important to look at what you collect, because sometimes we've actually created this monster for ourselves, and it's really to start minimizing what we actually also collect from our customers, and not really just collect a lot of random data points that does not add any value, you know. So I know it's very controversial, because we try and collect as much as we can, but we've seen that it actually creates a massive problem, where we need to start also looking at collecting valuable data that will give you the outcomes that you're actually looking at. Yeah.
So you're sitting with the data. How do you utilize it? How does it get sifted and used appropriately?
Yeah, so there's many frameworks. I know standard in the industry is obviously collecting firstly the data from multiple different sources. You get multiple different methods of data or formats. It's structured, unstructured, depending on how you sift. And I know maybe John or Matthew can add more to the technical elements of that. But then it goes through an extraction, transfer, and load process where you start applying analytics and ensuring that you actually get a nice data set that will give you the valuable outcome that you require. And through that cleaning process, you feed that into a clean database that most in the industry is obviously, it's your customer data platform that gives you the different tables, etc., that you would require to execute your campaign. And that's what we've done. We've actually moved a level up because we've seen that we have the capabilities now to enrich the data. Because first we just focused on the execution leg. So we utilize your data set. We believe what you pull out of Salesforce is the right one. It's segmented. It's targeted for a specific purpose. And we execute the message downstream. But we've moved a layer above where we said that, hey, we could actually utilize our data and merge it with our customers' data to ensure that the message downstream becomes more personal. Yeah?
And then, yeah, just to add to that, so I mean, the technology nowadays is all microservice driven, API driven. So if organizations want to make a decision about a customer, be it an offer, be it credit rating, whatnot, they don't have to have actually the data. They can just call the API and bring that data in. And that's also internal and external. So they can obviously feed into any internal system that they'd like. But at the same time, if they need to make a decision on a certain aspect, I need to do a credit check, almost a real-time call to the credit bureau to bring that additional third-party data. So it's almost having an open system that it can also check home affairs to see if this person's actually the right person that's coming to our branch. You know, all these different facets. He can do ID verification. So it's getting easier now because technology's there to just put in the data when it's needed.
Do you perhaps want to add to that, Jonathan?
Yeah, I think Anthony in the earlier keynote made I think what many of us probably would see as a fairly obvious statement, but it's actually so critical that having very clear objectives are central to any kind of process that needs to be undertaken. And he used the example of building a new house, kitchen. You need to have that clear idea of what you want your house to look like before you start deciding what materials you want to buy, for example. I can't tell you the number of times we get approached by clients with a very vague research question. They need to understand something, but they don't have very clear questions that we then need to sort of talk them through the process in order for us to be able to come up with a very clear understanding of what the scope is, what data needs to be collected, and to Sherwin's point, making sure that we're not collecting data just for the sake of collecting data, making sure that at the end of the day when you're sitting with a data set, it's the data that you actually needed right from the outset, and that it's actually going to answer the questions that you had at the beginning of the process. So I think having that very clear plan leading to a very clear vision or outcome of what you need to be aiming for. What does the data actually need to tell you? That is then going to inform whether you're focusing specifically on unstructured data or structured data, whether you're looking at qualitative, quantitative research or whatever it might be, in order to ensure that you're maximizing the value of the data that's being collected.
And I'll go back to you, Sherwin. In what ways can banks prioritize education, financial education? I guess we're back to where we were a little bit earlier on with that relationship building. How can they foster that to create more meaningful relationships with the people that they're serving?
I think that would answer a massive question that was in the room and a fundamental issue that a lot of the speakers referred to. Because I think through education you build trust. You know, I'm always looking at the TV and wondering, when are we as banks and MNOs and everyone collaborating and building a nice TV ad, showing a go-go getting an incoming call and being scammed by someone, you know? So why is there not a TV ad educating them on this scenario of fraud? You know, because through fostering the education to the customer, there's tons of value that a financial institution can unlock, I would think. We worked with one institution where we ran a series of education through multiple different channels where it was almost gamified, and you then go back to the app. It was more to drive in-app engagement and have an element of education, and you unlock certain levels and you then receive some loyalty. But as I said, the aim was to educate, but it's actually to get more in-app engagement. But there's a lot of value that banks can unlock. I think number one, you would first personally reduce the liability that's on the bank, because now you will get people making more, I would say, financially clever decisions when it comes to their money. They would be educated about your products. You would ensure that you don't carry the liability of all the various different methods of fraud that's taking place. So I think educating the consumer is very, very important. And I think, as everyone has been saying, the transparency in your product set, where hyper-personalization actually takes care of that, where you move from a product-led design and model, where you just focus on, hey, this is my 10 products, I just need to sell this, to more a customer-centric product design, where you ensure that you give the customers what they need and what's fit for their profile at that point in time of their life. Not, I've designed these products, you better fit to it. So that's my view.
And just to add on that with the financial literacy and education, so I mean, one of the kind of easy ways a bank could do that, if people aren't saving and they've got extra income in their bank, is to send them a message and say, you're doing well, would you like us to put this in your savings account? Simple messages to help them understand the importance of savings and understand the point of their credit score. There's a good example in Nationwide, the bank in the UK. There was hundreds of customers, thousands of them, going to a particular ATM in this village, and they were getting whacked with like £4 every time they took a transaction. They identified these people, sent them a message and say, if you walked about 200 meters up the road and used R1, you wouldn't get charged. And it literally saved a collaborative of like millions of pounds. Just simple little measures like that, just to give them, okay, we care about you. We're not just transacting with us. Let's help you build a better financial kind of awareness.
Yeah. Jonathan?
Yeah, I think the idea of banks building up stronger relationships with customers through financial education, financial literacy, I think it speaks to the need for customers, again, to feel understood. And particularly if you're targeting customers that are in need, for example, of improved financial literacy in order to, for example, save better or budget better, they feel like their bank understands them, and therefore that will drive increased loyalty with the bank. I think another element that's really important as well, banks in South Africa and across the entire continent are placing an increasing emphasis on SMEs and micro businesses. And so from a financial education perspective there, as banks are placing more emphasis on small businesses, there is an opportunity for banks to be increasingly offering financial education to small business owners. Tips on how to run your business, tips on, it's tax season, have you thought of this, or whatever it might be. So I think, and in so doing, you're not only driving increased loyalty with your small bank clients, but you're also helping those small bank clients, small business clients grow into bigger businesses, because you're actively involved in helping them to grow their businesses with better financial decisions.
Just really one last point on kind of the awareness is, if a customer is in a certain account that they're getting charged fees that they shouldn't, send them into a new account that they can start saving. You might not make as much money, but then the impact that has on the customer and the relationship and the trust increases, right?
Yeah.
Put them in the right package.
I like that. Any questions from the floor? I see one right here in the middle. If we can, I see another one there, and over there we do have some time. Microphone down here in the middle. If you don't mind keeping your hands raised over here, that'll help us a lot to make sure we can get a microphone in your hand. Thank you so much.
Thank you. I like the fact that this discussion was going towards collaboration, but I think one thing to also raise is collective responsibility. There's a lot of talk about banks and data and sharing and accountability, but when it comes to data, I think a gentleman earlier mentioned that we don't own a customer, we don't own their data either. So if a customer desires it, it should be shared, but not one way, both ways. So banks sharing it, retailers have a lot of information, MNOs as well, and then there needs to be that accountability in terms of protecting it. And at the end of the day, when you're sharing data, you're responsible for the data that sits with you. So how you share it, when you share it, and if you have the consent to share it is also very important.
Thank you. Anyone want to comment on that?
Yeah, well, I think from our perspective, not being a bank, but being a research company, we obviously similarly are also dealing with data on an ongoing basis. And so we have to have very strict policies in place, ensure that we're explaining very clearly to all of our respondents, whether we're doing interviews or focus groups or surveys, we explain to them explicitly how the data is going to be used, ensuring confidentiality, etc. And if clients, and it does sometimes happen, clients will then come to us afterwards asking, can we get, some contact details for these people that you've spoken to? And you've got to explain to the banks, whether it's banks or other clients, you need to explain to them, which they obviously know, the people that we've spoken to spoke to us with a high level of confidentiality and anonymity. Anonymity. Thank you, Boosle.
It's like an enemy. It's tough.
So yeah, I think the point is really important. Whether you're a bank or a research company or any other kind of business that's collecting people's data, and in this day and age, that's as the saying goes, it's the new oil now. Everybody wants to collect as much data as possible, and like Sherwin was saying, sometimes it's just for the sake of having more data. And there are businesses out there that are doing it highly irresponsibly, which needs to be managed and regulated far better than it is.
Sorry, just grab Sherwin quickly and then you come to you, Matt.
No, I think she made a very brilliant point. I think in a perfect world, actually the customer owns the data.
Yeah.
If I want to move from bank A to bank B, I should give you notice to transfer all my data to my new bank, and that's where we should actually evolve to. That data set that's confined for a bank, I need 10 fields. So when I move from you, please say goodbye to my data. My 10 fields moving somewhere else. So I think she made a very good point. And that speaks to the transparency. Tell me why you're using it and give me the option to opt out immediately.
Thanks, Matthew.
And I just do think people in general are getting more used to banks and companies using their data as long as it's used responsibly. But if I'm getting more personalization, things are more engaging to me. I don't care if my data's used. I think it's back in the day. It used to be quite restrictive. Now I think a lot of people are being a little bit more relaxed about it.
It's because in our daily lives, I think people increasingly are seeing the value when you're scrolling through Facebook or Instagram or X, or you're on Take a Lot to buy some whatever you're going to buy on Take a Lot, or you're on Netflix, as I mentioned earlier. The value of that sharing of data and those businesses able to ensure that you're actually seeing what you most likely would want to see. Customers are becoming increasingly willing to share their personal data, which adds that increasing emphasis and responsibility on the companies that are collecting that data.
Just one last point.
Sure.
I'm very upset because everyone makes money with my information but me.
Yeah.
If you get the point.
Thank you. There was a question in the middle here.
Matt, this one's for you. I quite liked your comment about the analogy with the Jarvis, AI. And John inadvertently mentioned the follow-on without realizing it, with that being vision. So what I want to know is, A, how far are we from the two in the context of this hyper-personalization? Because just the other day, they put up a news story of Musk sitting there with an AI bot, an actual AI bot. You see, so now, in my mind, if you just connect the dots, the last 5 years, everybody's launching bots, right, from the banking space. And all of them are pretty much the same, other than what they look like on the front end. But this jump between what that is and Jarvis is like turning on the light bulb without previously being able to, right? But just like the compact disk, I kind of feel like the Java step is not going to last very long before it changes over into Vision. So now we're talking about a hyper-personalized potential physical bot that has all of your data and all of your insights on hand at any given moment in time and basically advising you on how to live your life.
Pretty much. I think that's where it's going, right? And,
Right.
And it's very difficult to put a timeline on it. It could be in a year. It could be in 20 years. It might not ever happen. We could all be, completely driven by what we're told by our co-pilot. But I've read the article about Christoph from FNB. They're launching theirs. I know the other banks are really heavily invested in bringing all these data scientists in to build these vector databases. But they're starting at the point now. It's in its infancy. But I haven't seen that Musk piece. You'll have to show me that afterwards because it's scary.
But he's working on that.
Yeah, and the thing is, it's due. ChatGPT came out. Everyone's loving it. I mean, in my presentation after this, I'll show you what I built with it. Picture. But the banks now have gone rushing in to bring it internal. But you're right, that could be superseded in a year by something else. Yeah. And I heard the concept of a large action model, which is, yes, you can ask it something, and then you say, okay, do it. And that will then go and feed and bring everything in, and it's amazing, it's scary. But it's almost, and this goes to the thing about fintechs versus the traditional banks. Fintechs have an upper hand because they can move more rapidly. Oh. The traditional banks are obviously building stuff that could be superseded, so it's that collaboration, that partnership that comes into play again. But yeah, I don't have the answers of when and the hows, but yeah, the vision, I didn't catch that. That was a good one.
The question here, thank you.
Sherwin mentioned something about collecting valuable data, and I think what he says fits into my next question, which is about frameworks that we can use to measure customer experience. And this one is to the panel, Can you come up with any, or can you suggest frameworks that financial institutions or even the fintechs can use to make sure that they get value out of the customer experience that they're delivering? And I'm talking from the measurement perspective. Thanks.
So I think something that I alluded to earlier is the fact that banks and companies in general that are collecting CX data and whatever other data it might be, often that data is being collected in silos. And so from a framework perspective, I would say one big step that needs to be taken that currently is not being taken by at least all the banks that I have had conversations with, is if you are collecting CX data through social listening and you're collecting CX data through call centers and CX measurement teams and through your research and insights teams, if that data is not being shared within the bank and utilized and aggregated, you are missing out on a huge opportunity. I was saying to Lance just before the conversation now, that one of the biggest deficits I think that banks have is that they are reinventing the wheel continuously because they're collecting data to better understand the needs of a customer or the preferences or the behavior of a customer when another team or another department or another unit or another team member has already conducted that research, or they've already collected that data through some other channel that the research that the company is implementing. So I think from a framework perspective, it would be the integration of CX measurement processes would be something that needs to be prioritized.
And I might just add to that is any framework, you need to take into consideration what do customers want, what's the expectation. The first one, it needs to be convenient when you're kind of messaging and personalizing. Don't message me when I'm taking the kids to school or during the day at work, or, don't mess in it. And then on the flip side, don't phone me when you can message me, especially when a lot of people, if you could look at collections and collecting money, people won't pick up the phone if you're hounding them, very rarely. But if you self-serve them in a different way, send them a WhatsApp, changed it to a message, then you'll probably get more likely response. So it's really the right channel in the right time. And then obviously the personalization, so make it personal to me. The big thing is we find as well, especially with a lot of customers, is the ability to empower the customers with self-serve. So I want to self-serve. I want to do things myself. I will accept this offer online. I will make this payment myself. So having that self-service is a very powerful thing. And then as we mentioned about the chatbots and whatnot, is you want to chat to an agent. You want that kind of, integration, two-way comms. So it's kind of, if you think about the expectations and then put that into a framework of what you need to do when and how.
Thanks, guys.
So, yeah, thanks. John. The only thing that I would want to add is don't be afraid of traditional methods. Right? We're in Africa. Run that NIUSSD survey after the call. Send out a message to tell me what do you rate me or what do you rate my service as after a service is delivered. Don't be afraid, because I express myself on those surveys. I give you a 1 very, very quickly. Right? So we need to just take that input and really utilize it within our product designs and when we are designing the experience, because the next level of hyper-personalization is changing the interface on the application, right? The way Sam looks at the phone and the way I behave when I look at my phone and transact is very, very different, right? Where on the screen do I focus more? Because that's where you need to throw the offer to me. So it needs to get to that level where the app changes when I log in versus when my wife logs in. The balance needs to be hidden. Yeah. So those are the type of things. So please don't be afraid of the traditional methods. Utilize that, because customers very quickly tell you what their experience is. I think Savan can add to how they measure UX and experience today. It's traditional. Run a survey and ask the guy on the ground, how do you feel? Yeah.
Thanks, Sherwin. Any other questions? The one over there. Thank you.
I don't think, yes. And thanks, Sherwin, for that, because sometimes we tend to throw the baby with the bathwater. Traditional methods still have a role to play in the banking space. If you look at most countries within the continent, an ATM is a merchant on the street trading in physical cash. So you can't change that overnight. And I like the example that Matthew made earlier on, because it leads into my question, where Matthew spoke about an ATM informing a customer to move to a different ATM because maybe there's issues with that ATM. Within the context of customer experience, we tend to look at customer experience in a digital framework and lose or not address the physical aspect. I still believe strongly that there is value that the physical aspect of customer experience adds into the journey. Because if you look at perhaps not anyone in the audience, the majority of banking customers within the continent still believe in branches, ATMs, and merchants. And therefore, we can't rush them to a digital platform where everything overnight becomes digital. Jonathan, you've done a lot of research within the continent. What should be the model to transit or transform our journey into digital, while still ensuring that we maintain omnipresence? Because the physical aspect is still important. We can't overnight decide to do away with the physical aspect. Stephen earlier on mentioned the value of the branches. I think we're still defining branches incorrectly because it should have morphed into something else. And we need to move away with the times, but also understand that there are certain customers and certain segments within the customers that still have the preference and propensity to use certain channels in line with their preferences.
Yeah, it's a very good question. And I think there was conversation earlier this morning that touched on this dichotomy or conflict between introducing increased digitalization into banking, moving away from physical contact and branches, even going cashless in the environment or in the context of, particularly in South Africa and further across the continent, where customers are not yet at a point where they're ready to go full digital. Customers still want to have physical contact. They still want to use cash. And I alluded to the point earlier that it's kind of ironic that there's this push for hyper-personalization, because it's almost in a way that the banks are using a process of hyper-personalization to replace personal contact. And customers aren't ready for that. So in answer to your question, from a framework perspective, I think segmentation is important, because you've got certain types of customers that are increasingly moving towards digital. You know, there's a couple of people already today mentioned how many of us in the room have actually stepped foot in a branch in the last year or two. So there's a good proportion of the market that is at that stage where they're ready to be doing all of their banking digitally, but that's definitely not the majority of the market. But the challenge that the banks face is that increasingly, with the introduction of digital banks, and I know Time Bank's representative earlier mentioned that he doesn't like Time Bank to be called a digital bank, but these banks that are a lot more heavily focused on digital, as well as this upsurge in fintechs, telcos getting more involved. You know, the question earlier about the comment earlier about what happens if Apple decides they want to open a bank branch and suddenly take over global banking. The challenge that the banks face is that if they do not keep up with the times in terms of digitalization and keeping up with technological advancement in terms of service, they will get overtaken by these new players in the market that are focusing on that type of more digitalized technological service. So I think segmentation is critical, either to decide which playing field do you want to play on. Are you targeting the 85% that are more entry-level banking, sort of up, not yet in the middle market, and therefore still ensuring that you're serving the needs of those customers? Or are you wanting to focus more on the customers that are spending the most money but make up the smallest proportion of banked customers? Or do you want to fall somewhere in the middle? And if you're going to fall somewhere in the middle, you need to have strategy for both types of customer segments. So I think having a clear understanding of what sport and what field are you playing in is going to be critical going forward, particularly as there's more and more fintechs and digital banks in the space.
Thanks so much. I think there's one more question there. We're moving into our lunchtime now, so if you want to catch up with one of the gents during that time, you're very welcome. But let's take that. We had one more question. I think the microphone is there.
Yeah. Thank you. I just wanted to find out, so the banking industry, and probably not only the banking, but banking and non-banking industries are known or have been known for targeting customers with offers that aren't really relevant to the customer at the time, and that gave birth to regulatory requirements such as your marketing consent, where a customer has to provide consent for them to be contacted or to be offered with an offer. Right now, with the hyper personalization, how do we then change that narrative? How do we change the mindset, not only from a customer perspective but also from a regulatory perspective, to say now it's no longer the irrelevant offers, but it is something that is that is specific to you, and also how do you then bring the the hyper-personalization into the concepts of, the moment in life. So again, it's not about a personalized offer. It's a personalized offer at the right time that you need to give to the customer. Thank you.
You want to take this one, Sherwin, because after our lunch break, we're going to have a keynote on hyper-personalization with Matthew again, so we can look ahead to that. Do you want to tackle this one, Sherwin?
Yeah, maybe just a quick one then. So I think that's exactly what we're doing, and I'll speak to Greg. We need to take it to WASPA to make sure that we actually implement that rule. It's a good rule to implement, but the leaps that we're doing there, I think it's really, if you look at hyper-personalization, and I know Matthew will talk a lot about it, it's like a flywheel, How much time do you spend in the understand phase, where that data set becomes very, very important? Firstly, the use case. I want to start talking to you about my products and services. By that understand phase, you need to ensure that you first have the right data points, the segmentation is done, and then you move into the evaluate phase, where you evaluate which systems, etc., is going to be providing you the data, who's the best guy to partner with to get you your data set that you require, and then the execution phase, which is which channels you send downstream to, because that's what will formulate the CDP, the customer data platform, or let's say the table or the set that will ensure that you have the enriched data to send the right message to the right customer, and then it's tying it to what we do is the omni-channel platform, where you tie it to the preference, right? This guy prefers a message at this particular time of the day. He prefers it in this particular channel. So don't send me an email if I don't read email. Rather send it to me on WhatsApp or send it to me in an SMS, And so what a lot of the omni-channel platform does, it ensures that you knit the channels together, where if they don't receive your message on an email, and he doesn't open it in 2 days, start sending him an SMS, something else. Cool.
Thank you, Sherwin. Thank you, Jonathan. Thank you, Matthew. A round of applause for them. Thank you so much. Excellent panelists.